One of the most important investment principles is diversification, but what does that really mean? How do you take full advantage of its promise, which is lower risk for the same return or higher return with the same risk? The reality is that unbeknownst to them, many investors have not fully diversified despite owning a varied mix of asset classes and investment products. And ultimately, this results in missed opportunities to create more optimal portfolios. Joining me is Kris Koenig with Prime Capital Investment Advisors in Overland Park, Kansas. And Kris, would it be safe to say that many people may think they are diversified but probably aren't?
Very accurate. We see it all the time. When we first meet with a client, we look over their portfolio, and a lot of them seem to think they're very diversified. And where they are, frankly, is a good start. We see a mix of stocks, bonds, maybe even an annuity in there, and they feel like they're pretty diversified. We take a little deeper dive into that and look at other things, such as maybe private equity, or how are they protecting those assets in down markets. And so we really want to make sure they are truly diversified, and that's not just having a mix of, a basket of bonds or stocks or mutual funds.
So assuming true diversification means not having all the investments correlated, what does diversification look like for your clients?
Yeah, a couple ways. One, we have a strategy, we call it kind of the 3 Ps. It's public, private, and protection. So public is what most people think of when they invest. That's going to be stocks, bonds, CDs, those kind of things. Anybody can buy those if they have the money. But to kind of really get that true non-correlation, we like to bring in 2 other Ps. And that's private equity, or private, so that can be buying into companies that aren't publicly traded. It could be real estate, it could be private credit. But then also looking at ways that we can still get the gains of the upside of the market, but protect you on the downside, and so you don't have to have those big losses.
And then how do you know if you are truly diversified?
That's a great question. Again, we meet with clients all the time that come in and maybe want a second opinion and say, hey, Kris, am I on track for retirement? Are we truly diversified? These are just some of the questions they come to us with. And again, we try to take a deeper dive. First we sit down and listen to the clients and see, what are they actually saving for? What are our goals, right? We sometimes like to think it's just about numbers and gains, and really that's part of it. But at the end of the day, we need to learn more about the client, and we'll take a look at their portfolio and say, hey, is this working? Is there some things we could do to maybe lower risk but also increase your gains and set you up for a successful retirement and give you a little peace of mind?
My guest has been Kris Koenig with Prime Capital Investment Advisors in Overland Park, Kansas, and this is Retirement News Online.